Experts call an end to the slump in the property market. Another major cyber hack emerges, and both 7-Eleven and Best and Less are put up for sale. It's Tuesday, the 2nd of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, you've got an interview coming up after the show. This is a really interesting one. You're speaking with Dominic Capomola, the Chief Executive of Pacific Blue.
Yes. Now, Pacific Blue is the only generator and retailer of 100% renewable energy. And we talked to Dominic all about that, where the power comes from, the role of batteries in the economy, where the sector's going. It is a fascinating chat. I learnt plenty. Now, admittedly, I probably was starting from a low base, but Dominic has a great ability to put it into very, very plain English. It was a great chat.
Yeah, absolutely. The thing that I find most interesting is the fact that this company's actually been around for quite some time, that it was Pacific Hydro initially, and it's been around for kind of 30 years. So in a space that's kind of evolving so quickly, this is a company that's kind of almost a pioneer in the sector.
Yes, absolutely. And we talk about that as well in the interview. Well worth a listen.
Yeah, absolutely. Completely agree. It's coming up in a little bit. But before that, Sean, plenty happening. The main story this morning, national home prices rose 0.5% last month, triggering really a growing chorus of market watchers to say the property market downturn is over.
We didn't think we'd be saying that in May 2023. House prices across the country are now up 1.2% from their February lows, with all capital cities recording rises in April. The exception was Darwin. Sydney has led the charge, with prices up 3% since its January low and 1.3% last month. Perth is up more than 1% from its low, while Melbourne prices are 0.7% higher. Along with solid auction clearance rates, full employment, a pickup in top-end prices, and even signs of an improvement in housing finance, the market looks to have turned. Yesterday, AMP Chief Economist Shane Oliver, who follows the market very closely, said his forecast of a 15 to 20% top-to-bottom drop in house prices now looks overly pessimistic. But he added that the current dynamic of rising interest rates and a slowdown in the economy, alongside strong underlying demand, much of it from immigration, and constrained supply, was very unusual. So the risk of another drop in prices remains high.
So why the turnaround then, Sean? Is it mostly immigration?
Yes, I mean, that's the main reason. Immigration has returned much quicker than expected, especially international students. There were less than 6,000 immigrants in the 2021 financial year, obviously COVID affected. This financial year, that number is expected to reach around 400,000. That's about 70% more than the government forecast in October last year. There's other reasons too, Michael. During the pandemic, the average household size fell to less than 2.5 people per dwelling. Now, the Reserve Bank reckons that added about 120,000 dwellings to demand. Vacancy rates, rental vacancy rates, are very, very low, and at the margin, that's added to the number of buyers in the market. Also, some states, notably New South Wales, have introduced first home buyer incentives, such as no stamp duty. That's added to demand. Also, supply has slowed. Cost increases, labour shortages, falling building approvals. That's really slowed down supply. Overall listings of houses for sale are also down. So there's fewer homes being built, fewer available for sale, and more people wanting them. That's enough to put a floor on prices. Bottom line, Michael, looks like the housing slump is over, and forecasters are now talking about how much prices will rise. AMP Shane Oliver doesn't think they'll rise much this year, but the Commonwealth Bank came out yesterday and said they expect a 5% jump in Sydney in 2023 and 2% in Melbourne. So, Michael, looks like the slump is over.
All right. Now, Sean, I know you often criticise me for focusing on...
Oh, Michael, I never criticise you.
Seemingly irrelevant details, but I want to... There's just one point that you made there, and this is relevant, so this is quite exceptional for me. That point that you made about the fact that the average household size has fallen to less than 2.5 people per dwelling. That's really interesting, isn't it? So what's that, kind of smaller families or more singletons, kind of?
More singleton, is that what you put it? How you put it?
I don't know. Is that offensive?
I don't know. Maybe if you come from the town of Singleton, it is. But
more bachelors and spinsters? I don't know.
I don't know. Well, but that is a lot more people living on their own. So that is actually the main reason for it. people. And during COVID, tree changes and people like that would shift and live on their own. That is actually the main reason, more single household dwellings.
And didn't Simon Kustenmacher, our favourite demographer, tell us as well that instead of there being the baby boom that you might have expected with everybody in lockdown and not much else to do, that in fact people kind of held off starting a family or adding to the family because of the uncertainty around all these circumstances?
Yeah, financial worries. So instead of having a baby boom, we kind of had the opposite.
Do you think that's enough to now classify us both as amateur demographers, Sean?
No. No, not a chance.
All right, thank you. How did local markets perform yesterday?
The S&P ASX 200 finished the day up 0.4% to 7,335 points. It actually fell sharply in the final few minutes of trading, so it could have finished the day much better. Utilities, energy and healthcare stocks did best. Tech stocks were among the worst. Now, among the large caps, the banks were stronger, with National Australia Bank and Commonwealth both rising more than 1%. WiseTech Global was the worst of the large caps. It finished down 2.3%. Newcrest Mining was off 1.5%. BHP was lower. In fact, a lot of the big miners underperformed yesterday. Of course, this was all going on ahead of today's interest rate decision by the Reserve Bank. Plenty of corporate news. Adore Beauty founders Kate Morris and James Hite will step down from executive duties, but they'll stay on the board. The Chief Executive of Southern Cross Austereo, Grant Blackley, will step down at the end of June after 8 years running the media company. He'll be replaced by Chief Operations Officer John Kelly. Santos' share price rose more than 2% after Papua New Guinea's national oil company extended Santos' bid for a 5% stake in an LNG project in that country, and Judo Capital's share price jumped more than 1% after it upgraded its profit margins. And Michael, in bond markets, investors believe the Reserve Bank won't lift interest rates when it meets today. In fact, they've priced in just a 9% chance of a hike. This week also, the US Federal Reserve meets. It's expected to lift the benchmark rate. Similarly, the European Central Bank is expected to lift its benchmark rate.
It's a massive week for central banks.
I wonder what they do at the end of the week. They get together, big Zoom call. How'd you go?
Everyone's sitting there with their champagne and their wine and stuff going, God, what a week.
Relaxing. Yeah. Cheese, cabanossi, things like that.
Yeah, you can imagine the European Central Bank, the cheese that they bring would be far superior. And we turn up with our cabanossi. Yeah. And our japs.
What would the US turn up with? A burger.
A hot dog.
A hot dog. Yeah, of course. Of course.
Actually, it makes me want a hot dog. I know it's very early in the day for a hot dog.
See, I have never, ever had a hot dog. Well, no, I've had a hot dog. I've never enjoyed a hot dog.
I'm sorry, what?
I have never been able to stomach hot dogs.
Oh, Sean. So previously you've confessed that you don't like hot chips, and now you don't like hot dogs.
I lived in the US for a while, and everyone ate hot dogs. You'd go to baseball. You had to have a hot dog. I just never enjoyed it.
All right, the big test. Mm-hmm. How do you feel about meat pies?
Look.
Oh, no. Sean.
More of a sausage roll, man.
Oh. I don't think I've ever been more disappointed in a fellow human being than I am right now. Goodness me. International markets, please, just let's finish this.
Just get rid of it. Righto. Yeah. Well, Michael, commodities are generally lower this morning.
It can't be lower than my respect for you, that's for sure.
Coal and iron ore prices are also down, and the Aussie dollar, Michael, is trading at 66.3 US cents.
All right. Well, we'll be back in a moment with the rest of the day's business news. Sean, the federal government will undertake a 3-month review into the $120 billion 10-year infrastructure pipeline.
The government says it inherited a list of nearly 800 projects from the Morrison government, including many press release projects, without adequate funding. Prime Minister Anthony Albanese said the former government's obsession with pork barrelling left Labor with no choice but to undertake a wide-scale review. Now, some are likely to be scrapped, though there won't be any announcements about that in next week's budget. Cost blowouts are also occurring due to supply chain pressures, while some projects were announced with little consultation with state governments, including no state funding, according to the Prime Minister. If any of the projects are deemed undeliverable, then the money will be used elsewhere.
Geez, stand by for this one. There could be a few disappointed electorates around the country.
Yeah, in fact, the media this morning are mentioning all these different sort of roadways and regional roads that may not go ahead. Now, presumably they're mentioning them because they know something that the rest of us don't know. But yeah, there's going to be a lot of disappointed people, I dare say, once this review's done.
Yeah, sounds like it. Now, I mentioned this one at the top of the show, Sean. A major cyber criminal hacking group claims to have stolen data from Australia's largest legal partnership, HWL Ebsworth.
ALPHV, which is also known as Black Cat, says it has 4 terabytes of data from HWL Ebsworth's servers, including internal company data, employee personal data, financial reports, accounting information, loans information, and insurance agreements. According to the Financial Review, it also says it has client documents, including loan data, credit card information, and financial data. A number of sample documents were included on the ALPHV victim website post. The law firm's client list in the last 5 years includes the Reserve Bank of Australia, the Australian Electoral Commission, the Department of Parliamentary Services, and the Australian National University. Now, HWL is still trying to ascertain what, if anything, has been stolen, but this has the makings of a major, major breach.
Yeah, it certainly does. Now, Origin Energy, which is, of course, under takeover offer, yesterday lifted its earnings guidance on the back of lower coal costs in Australia and a strong performance from its UK-based energy retailer.
Gross earnings for the energy markets business is expected to be somewhere between $950 million and $1.2 billion. That's an upgrade of about 60%. Not bad. In fact, very handy when someone is trying to buy you. It's the second upward revision in 4 months. Origin share price was up slightly yesterday. It's trading at $8.38. Now, that's 20% higher over the past 6 weeks. That's when Brookfield and EIG partners bid $8.91 a share for them. The difference between the offer price, $8.91, and the trading price, $8.38, reflects concerns over regulatory approvals for the deal, particularly from the Australian Competition and Consumer Commission.
Now, if it feels like there's more cars on the road, Sean, here's a bit of proof. Toll road group Transurban has upped its annual dividend guidance for the second time in 6 months as traffic returns to the roads.
Yes, so true, Michael. The forecast of 58 cents a share almost takes the dividend back to where it was pre-pandemic. Mind you, I reckon there are more cars on the road now than there were pre-pandemic. I'm just going to complain here. Over the weekend, I'm sick of Saturday driving, particularly to kids' sport. I love going to the kids' sport. I love watching it. But did you say to that
Sorry,
one?
I think I let my true feelings be known there for a moment. Please go on.
You weren't referring to the traffic. You were referring to the kids' sport.
Well, I mean, it's hard to separate the two as far as I'm concerned. Kids' sport is Saturday traffic, and it's just
when your kids get older. I mean, Henry's in year 1, is that right?
That's right, yeah.
So, and Maeve's not quite there yet, right? My kids are high school and beyond. Your whole weekends, or certainly your Saturdays, are spent watching sport. And it's great fun, but the traffic drives you mad.
No, I disagree with the idea that it would be great fun. I mean, we're in our first season ever of soccer, and 6 games in? I'm like, I think I'm done. Is it too early to call it? Like, that's it. We're out. We're a non-sporting family.
Anyway, certainly cars are back on the road. I mean, Transurban was paying 58 cents a share ahead of the pandemic. COVID hit, people stopped driving. Shareholders had to stomach much lower payouts. Now, traffic levels on most of its toll roads are back to pre-pandemic levels. In Sydney, they're actually higher, but that's mostly due to new roads like WestConnex. Mind you, in Melbourne, toll revenue is actually lower, which has actually got a lot to do with roadworks and things like that.
And Sean, is there a single sporting ground, junior sporting ground in Australia that has adequate parking? I don't think there is.
No, definitely not. It's part of when you actually create a sporting ground, the idea is that you put about 60% capacity. So Yeah, dear.
Because you really want all the parents, all the families to be just nice and aggravated when the kids start, because that's a guaranteed way to ensure good behaviour from spectators, is just deprive them of enough car parks.
It's an incentive to get there early, to get your kids there on time, because you try and get there just that little bit earlier than 40% of the people going, so you can get that final car park. And that way your kid's there on time.
We have a 1 p.m. game on Saturday. I don't know how much earlier I need to get there, considering the game starts at like 8 a.m. I'm not getting there 5 hours beforehand just to secure a park. I think we're boycotting.
Your poor children.
Indeed. We should move on. Viva Energy, Sean, has completed its $300 million acquisition of the Coles Express fuel and convenience retailing network.
I love this story. So Viva, which has pretty much always been a fuel refiner, is pushing into grab-and-go shopping. This deal means Viva takes ownership of 700 convenience stores, which were previously operated under an alliance between Viva and Coles. Now, remember last month, Viva did a deal to buy the South Australian-based On The Run Group for $1.15 billion. Operators like Viva know that the growth in electric vehicles in Australia means their primary role, refining oil and pumping petrol, will be diminished over coming decades. And so they're looking for options. Convenience shopping is Viva's play. Now, including On The Run and Coles Express, Viva's earnings will be about 50% non-fuel. Fascinating, I reckon.
Yeah, and staying in the grab-and-go sector, 7-Eleven's owners have begun talks on selling that business.
Two families own that business, the Withers and the Barlow families. In a statement yesterday, they said the time is right to review options. Now, 7-Eleven began as a single store in Melbourne in 1977. The group now has 750 stores across Victoria, New South Wales, the ACT, Queensland and Western Australia.
Another deal on the go at the moment as well, Sean. It's a deal frenzy at the moment, isn't it? It's a bid for listed retailer Best and Less, but this one has a bit of a twist. The offer price is less than what Best and Less shares were trading at.
And what's worse, one of the major shareholders has agreed to it, according to the report in the Financial Review. So retailers as Brett Blundy and Ray Itaowi apparently lobbed a bid for Best and Less at $1.89 a share. But the fashion outlet's share price closed at $1.98 on Friday. Now, Michael, call me old-fashioned.
Okay.
But normally bids are made at a premium. Private equity group Allegro Funds owns 32% of Best and Less, according to the Fin. It's agreed to the deal. Also selling is chair Jason Murray, who owns 8%. So what's that? 32 plus 8 is 40%. Blundy already owns 16%. Add all that, you're at about 56%. Now, I really feel sorry for any of the other shareholders, particularly those that bought in early last year at about $4 a share. Best and Less has about 250 stores competing against the likes of Kmart and Big W. I think we're going to hear a bit about this deal.
I suspect so. It's a fascinating one, that one. Something a little bit different. Now, Sean, 2 large solar farms, a wind farm and an 8-hour battery will be built as part of the New South Wales electricity infrastructure roadmap to help boost clean power.
Just a few days after the Hunter Valley's Liddell coal-fired power station closed down, New South Wales government representatives said the 4 projects will involve more than $2.5 billion in investment and should deliver enough electricity to power 700,000 homes. It's the first successful tender under the roadmap, which aims to incentivise private investors to accelerate the transition to green energy.
And Sean, plenty going on in the world of sports management, with the AFL getting a new boss and Rugby Australia losing its chief executive.
The AFL announced that Andrew Dillon, the league's general counsel, will become chief executive from 2 October, taking over from Gil McLaughlin. The AFL have been looking for a new boss for more than a year. Eventually, they settled on an internal candidate. Running the AFL, Michael, I think is probably considered one of the most prestigious non-government roles in Australia, I would say.
I think that's reasonable. Also, one of the most high pressure roles as well, because you've got such a very engaged, huge supporter base.
Yeah. And Rugby Australia boss Andy Marinos announced his resignation yesterday and will depart next month. The Rugby World Cup, which is the 3rd biggest global sporting event on the calendar every 4 years, only behind the Olympic Games and football's World Cup. It's on in November. So I've got to say, Marinos' timing is somewhat surprising. He's been praised for doing a great job turning around the finances of the sport. Yesterday, he just said he wanted to pursue new opportunities.
All right. In international news, Sean, US regulators are working to resolve the First Republic Bank crisis after a midday deadline passed for submitting final bids to take over the struggling lender.
The Federal Deposit Insurance Corp has asked banks including JP Morgan Chase, PNC Financial Services and Citizens Financial Group to submit offers. That's according to Bloomberg. A couple of banks were asked to submit offers. Bank of America Corp, US Bank Corp, they decided not to. Now, if no agreement's reached, regulators have the option of seizing First Republic and taking ownership of the bank. It's hoped that the bidding process, kickstarted by regulators, can pave the way for a tidier sale of First Republic than what happened at Silicon Valley Bank and Signature Bank last month. Authorities are stepping in after a particularly large drop in the company's stock over the past week. It's down 97% this year.
Goodness me. All right. Up next, Sean, is the Fear and Greed Daily interview with Dominic Capomola, the Chief Executive of Pacific Blue.
All about renewable energy, the only 100% generator and retailer of renewable energy in the country, according to Dominic. Great chat.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 2nd of May, 2023. Make sure you're following the podcast and join us online, of course, on LinkedIn, Instagram, Twitter, and Facebook. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.